It's July 2022, and that means it's time for the Phoenix metro area real estate market update. Well, let's start with the topic on everyone's mind, the economy slowdown and recession. From the Wall Street Journal, well, three-quarters of global CEOs say that we're either in a recession or will be in a recession in the next 12 to 18 months. Here's a look back at prior recessionary periods going all the way back to the early 70s. The blue graph line is a 30-year fixed interest rate, and the yellow boxes show the recessionary periods. We see the rise in interest rates in the first 6 months of this year. Historically, during a recessionary period, interest rates go up at the beginning, but in order to come out of the recession, interest rates are lowered to stimulate the economy moving forward. Historically, we've seen repeated upticks in interest rates followed by lower interest rates. This is the same data in a table format and details what has happened to the mortgage interest rate during each of the recession periods in this country going back to the early 80s. So, when did it happen? How long it happened? What was the starting interest rate and what did it fall to? There's one thing that every one of these recessions has in common. In each instance, mortgage rates fell. This from Fortune magazine: over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession to the trough. And in many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. Well, what about home prices during a recession? Well, 4 out of the 6 times that we were in a recession, home values appreciated: 6.1, 3.5, 6.6, and 6.0. 2 times they fell. Once it was marginal in the early 90s, where it was 1.9%. And the other, of course, was the crash of 2008, and the causes of which have been covered in detail in other market updates. So we won't go into detail, but we'll point out it was poor lending practices that at this time no longer exist, and market conditions that are very different from then. So, historically, what we have seen is that a recession does not equal a housing crisis. Well, let's take a look at what is changing in real estate, starting with the number of offers. Well, that number is declining, much to the delight of fatigued buyers. It peaked around an average of 5.5 offers in April, and then it dropped to 5, and now 4.2 was the last number released in June. We're also seeing a decline in offers over asking price. A month ago, 61% of offers were over asking price, and that number is now softened to 55% over asking price for the average home sold. That's still more than half of all offers over ask. Now, the month's supply of inventory of homes, well, it was at a record low in January of this year at 1.6 months. And the latest data, well, it shows a 2.6 month supply of inventory. Now, remember, a balanced market is a 6 month supply of inventory, which we have not seen since 2012. So, while it's nowhere close to a balanced market, it is certainly moving in the right direction. All of that leads to a slower pace of sales. This from Mark Fleming. There has been a pickup in the inventory that we've seen recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. Now remember, month supply measures the inventory of sales relative to the pace of sales. Same inventory, fewer sales means more months supply. So, what's driving this are 2 factors. One is the new monthly listing counts have started to increase. The green bars are shown here for 2021, and the blue bars are 2022. So, for the first time since the low inventory conditions that we've been experiencing, we see April and May new listings have actually increased. And number two, at the very same time, the pace of sales is also slowing. This graph shows the existing home sales seasonally adjusted annual rate from the National Association of Realtors. The green bar on the right, the year-end projection of 5.4 million home sales by the end of 2022 if we continue at the pace that we're selling homes today. Now, it's important to note that 2020 and 2021, well, they were absolutely incredible years. They were an anomaly in the housing market. So, looking at the green bar, we see a definite turn toward the pre pandemic years of 2018 and 2019, which we have to remember were great years in real estate. What's interesting is at the beginning of the year, Realtor.com projected that we would have a very small 0.3% increase in inventory. And now they've reforecasted for the rest of the year at a 15% increase in inventory. That means more options for buyers, and that means less competition, fewer bidding wars, and at some point, less upward price pressure. As for home prices, well, all the forecasters are calling for appreciation. Fannie, Freddie, CoreLogic, all of these forecasters, the average is 8.5% appreciation, not the tremendous appreciation that we saw last year. These forecasts started the year at around 5%, and they've adjusted up and settled in around 8.5%. And this is a look at the results of the Home Price Expectation Survey, which is 100 economists, housing market experts, those that are in the know with housing across the country. They're surveyed every quarter. And this is what they see for appreciation this year and the next 4 years, so a 5-year window. So 9.3% appreciation, somewhat in line with what we saw from other forecasters at about 8.5%, that 8 to 9% range. And then in the next 4 years, adjusting to 4%, 3%, 4%. So, what experts are saying is a buyer is likely to see a good appreciation in housing this year. The average appreciation going way back has been about 3.8% for residential homes across the country. So, appreciation in 2023, 2024, and 2025 is looking at a more normal appreciation. On the supply side of things, going all the way back to the 70s, you can see everything in the blue is the number of single family housing units brought to the market pre 2008, so before the housing crisis. And the gray bars are the average annual units completed each year. It references the 50-year average in the number of homes brought to the market and shows that for the last 14 years, that gray bar, we've been below that 50-year average in the number of builds brought to market. This year, builders are bringing units to the market and will surpass the 50-year average. So it's improving. They can't do it overnight, but it is improving. On the demand side of things, well, demand is driven by the size of the millennials that are moving through the market. Isolated in blue, the millennial generation, the largest generation behind the baby boomers, they're moving through the peak home buying years. According to NAR, in their recent home buyer survey, 81% of first time home buyers fall into this category in this age range. 43% of all buyers fit in this category. So, tremendous demand. So, these two graphics, one show that we have a lack of supply that's been coming to the market for the last 14 years, and builders are helping out there. And then we have the tremendous demand from millennials and people that are moving through their peak home buying years. And now on to some local Phoenix metro area numbers. And finally, good news for buyers. Active listings, the homes available for buyers to consider purchasing. Well, that has gone up sharply. Back in February of 2022, there were about 5,051 available. Normally, in a normal market, we carry about 16,000 to 18,000 active listings. So this year in June, we're at 15,788. So from February to June, it went from 5,000 to approximately 16,000, a very sharp increase and really good news for buyers. Here's another look at the inventory situation. Month supply of inventory. We've had a lot of comparison back to 2008 to now. Are we facing the same situation? Very different market circumstances. Back in February of 2008, the month supply of inventory was 20.4 for the Phoenix area. July of 2022, it's gone from less than a 1 month supply to 2.2 months. So good news for buyers, but also not anywhere close to what some of the fears are regarding 2008. That brings us to the other topic that we're hearing a lot about, and that is price reductions. Are prices falling? Well, this graph shows the number of price cuts, so price reductions on homes, sharply increasing. This goes all the way back to 2018. So, price reductions are a normal thing, especially when a market is correcting, which is what is definitely occurring here. We've been on a path of huge increase week after week, month after month. And now setting the price too high means that reductions are being taken. So, when you say prices are falling, the question to ask is what are they falling from, which was record highs. So, a better way to look at that is values or appreciation. Here's a look at the price per square foot on average by month. So in January of 2022, it was 274.43, February 284.45, March 290.8, April 302.55, May 303.39, and then June down to $300.44 per square foot on average. We also see that it's well above 2020 and 2021. 2020 ended at 212 a square foot and 2021 ended at 268 a square foot. Well, there you have it, July 2022, the Phoenix market update. A lot of activity in the last few months and a lot of good news finally for buyers. As always, we're here when you need us. The Reby Homes team and real estate beyond expectations. We'll talk with you next month.